Bitcoin's down, gold's down, stock market's down, bond market's down, rates are up. I mean, all of it. It would just be for briefly rates would go down and then they would go up because everyone would know the print's coming. And then we'd have another, big print, right? I mean, we've had two. 2000 was one, or 2008 was one, 2020 was one. And we know humans learn through experience. We've seen this playbook. We know what they do. Yeah. We know they are not going to let our economy fail. We know that inflation, pick one, economic collapse or higher inflation. They're always going to pick higher inflation because economic collapse is just untenable. And so, I believe the next print could take the Fed balance sheet from its current level in the mid high sixes to 20, and I mean, if that happens, gold 10,000, Bitcoin 1 million, possibly. Yeah. I mean, it's I'm not saying it's for sure, but it's possible, right?
Hey guys, welcome to Everyday Finance. An uncanny resemblance to the devastating bear market that occurred in 2022 is the subject of Larry Lepard's article, which focuses on a worrying pattern that is appearing in the price movement of Bitcoin in 2025. According to recent findings, there is a link of 98% between the movements of today and those of that earlier period. This suggests that the current decline is not simply a random occurrence, but rather a part of a recurring rhythm. In November, Bitcoin saw one of its worst months since 2015. With the price falling more than a third from its all-time high, this occurred at a time when many people were anticipating a significant rally. Despite the bleak charts, however, institutions are gradually making their way back to risk over time. The fact that U.S. stock funds are experiencing significant inflows and spot Bitcoin exchange-traded funds have added around $220 million in new capital demonstrates that major players are not leaving cryptocurrency. If the pattern that occurred in 2022 continues, it is possible that a genuine recovery will not occur until far into the first quarter of the following year. In the event that investors are patient, this arduous stretch may prove to be the foundation for the subsequent significant upward surge. Bitcoin's current rhythm comes seen as painfully familiar. Despite the fact that history does not repeat itself precisely,
entirely dead, but yes, I kind of do. I mean, I think the cycle got started based on the size of the block rewards, and now the block reward is awfully small compared to the total outstanding. Yeah. So changing the block reward probably doesn't matter as much as what the ETF buying is, as an example. ETFs are buying much more than the block reward. So I kind of do think the 4-year cycle is fading. I think there will still be, Mike, I think there'll still be a cycle in Bitcoin. I mean, it's just the classic fear and greed cycle, right? And we just saw it a little bit in the treasury companies. Everyone got all excited, and then greed. Oh, now fear. And
that was a very accelerated cycle.
That was a very accelerated cycle. Yeah, and I think we're going to see that again. So my model, and this is just, I'll be wrong, okay, but I'll just give you my best guess. My model is that we're going to break out from this 120 some odd area, and we're going to go to 140, 150 very quickly, and then it's really going to get a little nuttier, and we might squirt up to 150, 200, 250, maybe even 3. I don't think we make Samson's number of 1 million, but I could easily see us, and at that point in time, we'll be a couple standard deviations or 1.5 standard deviations away from the power law, which I use as a model for modeling the price. And I think when that occurs, when that deviation occurs, then we might get a correction, and people get over their skis. Everyone will be excited. People will be using leverage, all the things that, we know get people in trouble. And, it'll go from 300 back to 140, and that'll feel terrible for the people who bought it at 300. And for those of us who've been around this for a while, we go, oh yeah, no, that's normal. The prior corrections have been 70%. I don't think we're going to see a 70% correction again. I think we're too far into its adoption. There are too many institutions on the bid side. I mean, look at all this reported OG selling. I mean, billions and billions of dollars, and it's held steady as a rock over 100. So I think there's and by the way, that is about the power law level of where it should be right now. So yeah, my view is we're just continuing. I mean, it's funny because Bitcoiners are very impatient. Even though we have long time preferences, we remember the past glory days and we want it to happen overnight, and look, my view is focus on the power law. If this thing goes up, 35 to 39% a year, I mean, show me another investment anywhere in the world that's, has the probability of doing that. There aren't very many. There are a few, but not many. And, so that's how I see it. Yes, to shove us to the outside of that range, I think that would do it for sure. We are, as my speech will show, and I'll talk about, we're printing. The Federal Reserve has just said, we're stopping the runoff, and we're going to have to grow the balance sheet. And they've said it 2 or 3 times. They've tried to normalize, like, this is no big deal. It's not QE, which it is, and they've tried, right. And they're trying to just make it sound normal. And so we're now back in a printing environment. We've also got, interest rates coming down and probably likely to come down more. I saw somebody on Twitter, they say that 7 of the Fed governors want 50 bips this time. I don't know if that's true, but and we've got a Fed chairman who was hawkish, has been beaten up pretty bad by the president, and is gone in May.
Yeah.
And it's very clear that the new Fed people, will be more dovish, and rates will come down, and they'll give up on the inflation mandate for a while, which they pretty much mathematically have to do. And so we will be going back into, printing money, and that will then, I think, put stress on the 10-year, and that stress on the 10-year will lead to QE. And again, they're going to try and just say, oh, it's all normal, ignore the man behind the curtain, but it's not normal. It's money printing. Now, the wild card that I can't predict, you can't predict, nobody can predict, is, does something break? We've got this very highly leveraged system. We got a lot of tenuous shit out there. We're now seeing that there's a lot of cracks in private credit. We know that there's a huge private equity business where all the marks of those things are kind of made up. We've got, Tricolor failed. We've got First Brands failed. We've got another one recently, I think it was Renovo, just failed. These are bankruptcies, large bankruptcies that are highly levered. And I think as these things continue to unfold, we've got a lot of commercial real estate that's underwater. Zoom came along and basically made it so that we could all not go to the office. So all these $200 million office buildings in these cities in the United States, which had hundreds of millions of debt against them, are now worth, 30 cents or 20 cents on the dollar. Well, that debt went somewhere, money heaven, but somebody lost that money, and it's hidden in the insurance companies. It's hidden in the regional banks. I heard from a friend in DC who's very well connected. He said there'd been discussion inside the Fed of doing something along the lines of, a commercial real estate lending facility. Okay, small bank, you made a bad commercial real estate loan, we'll buy it from you at par. This is like what they did with Silicon Valley Bank with the BTFP. So, the book says, I think we know, most Bitcoiners know, they are going to have to print the money mathematically because of Lynn's point that nothing stops this fiscal train wreck. However, what we don't know is how they're going to do it, how normal they're going to make it seem, if there's going to be an emergency. And by the way, I should warn everybody, if there is an emergency, because I remember March 2020, like it was yesterday, and I remember 2008 like it was yesterday, Bitcoin's going down.
Yeah.
If we have a big...
You sell what you can.
Yeah, exactly. If we have a big credit event, okay, like something breaks and, some bank's in trouble and, you'll know it. In fact, we almost kind of had one, on Liberation Day, right? When Trump said we're going to put a 100% tariff on, on China and all. Market was down 20%. A 10-year went up, shot up. We were on the cusp.
Yeah.
And he quickly turned around and said, oh, no, I was only kidding. We'll have a 90-day. We'll wait for 90 days. But something like that, something really serious and large breaking that seems like contagion would lead to a correlation of one where, Bitcoin's down, gold's down, stock market's down, the bond market's down, rates are up. all of it. It would just be for briefly rates would go down and then they would go up because everyone would know the print's coming. And then we'd have another, big print, right? We've had two. 2000 was one, or 2008 was one. 2020 was one, and we know humans learn through experience. We've seen this playbook. We know what they do. Yeah. We know they are not going to let our economy fail. We know that inflation, pick one, economic collapse or higher inflation. They're always going to pick higher inflation because economic collapse is just untenable. And so, I believe the next print could take the balance sheet, the Fed balance sheet, from its current level in the mid high sixes to 20. If that happens, gold 10,000, Bitcoin 1 million, possibly. Yeah. it's I'm not saying it's for sure, but it's possible, right?
Fong La, the CEO of Strategy. provided significant insight into the manner in which the company manages its substantial Bitcoin reserves. According to him, the only time they would sell Bitcoin would be in the most dire of circumstances, if Strategy's stock would trade below its net asset value and the company would no longer be able to obtain capital. As a result of this circumstance, selling becomes a mathematically necessary requirement in order to safeguard the Bitcoin dividend per share and maintain the firm. At the moment, the plan is the complete opposite. As long as the stock continues to trade at a premium, Strategy aims to continue paying high preferred dividends up to $800 million annually, in addition to increasing the amount of Bitcoin it holds per share, increasing the amount of money it raises, and increasing the amount of Bitcoin it buys. Luck contends that demonstrating long-term financial health will be accomplished by continuously meeting these dividends, especially during periods of unfavorable economic conditions. A new Bitcoin credit dashboard was shown by him, which demonstrated that the company is able to cover its debt and dividends. Even in the event that the price of Bitcoin takes a significant knock, he also reaffirmed Bitcoin's ability to remain a scarce worldwide currency. His advice is still applicable in the long run. Think in decades rather than cycles.
So you're on the Titanic and, oh, well, it's listing a little bit.
Yeah.
No, it's no big deal. It's listing a little more. So, yeah, but to your question, there are really only three ways out. One is you let it all collapse. You have a debt default. And it kind of looks like 1929. You have massive depression, social unrest, all asset values collapse. Everyone loses a lot of wealth. And, then probably there's some kind of a reset, which is what they did with gold back then. So my view is that politically, they just won't let that happen. They'll choose hyperinflation. Sadly, they'll choose inflation before they choose that. The middle way, the best and the fairest way, and the positive way, where look, in this transition, when rules change, people who are on the long side of the rules get hurt. So there's no way avoiding that. But what I care about is I want my kids and grandkids to live in a good world. So the rules have got to change. The middle way is a monetary reset. I mean, Trump should have, in the early days of his presidency, he should have come out and said, hey, look, we've really made a mistake here, folks. We believe this Keynesian model. We've built up way too much debt. We've emphasized growth over efficiency. We've trusted the Federal Reserve, and they've made a mess of this whole damn thing. We've got to return to sound money, and here's my plan for how we're going to do it. And it would have involved gold or Bitcoin or some other form of sound money. It would have involved writing down the debt and saying to the debtors, I'm sorry, you're getting 50 cents on the dollar or less on a real basis. But the pain will be felt across society, but it'll be relatively evenly distributed. Well, except for the people who hold the debt. And on the other side of it, at least we'll be back on a sound money standard. That's the responsible way to do it. I actually have a chapter in the book where I talk about that, and I recommend that, and I explain. I wrote the speech that I would have given if I were president. But to be quite frank with you, Mike, I think the odds of that happening aren't really high yet. Yeah. They're just, it takes a lot. It would take enormous political courage, and it might even backfire. Somewhere along the line, they might say you can't do it. Although, Roosevelt and Lincoln and FDR and others have, I already said Roosevelt. Others have reset the monetary system. Nixon have reset the monetary system. So there's precedent for it being in the executive branch. But so yeah, that's the reset. And the third way. And I'll just give you kind of my model, because I'm sure people want to know this, and I'm going to give this model in my speech. The third way is kind of how I see this unfolding, okay? The Fed is going to print more money. We know that. We're either going to have a big print or we're going to have a medium print sometime in the next couple of years because of the math. Inflation is going to go up a lot. 9 sounded high, and we brought it back down to 3. Where do we get back to 1% interest rates and growing the Fed balance sheet and yield curve control, and there'll be a wave of home refinancings because we'll get the mortgage rates down. Mm-hmm. That's all creating money, right? And so inflation will go up a lot in the next few years. Okay, I mean, like double digit. Like,
they need 9 and be able to tell us it's 3.
Well, that's right. Yeah, and it'll be 18 and they'll be telling us it's 12.
Yeah,
but it'll be high.
Yeah.
Okay, so but the flip of that is the good news is the economy kind of be working. There will be jobs out there. There'll be people building AI centers and energy and so forth. So the economy is still in one piece, but it'd be inflationary. They're going to run it hot. Okay, so that's kind of model one. So now it gets to 2028 an electoral cycle. This gets really interesting. The question there, the $64,000 question is, can red team win or does blue team win? And I fear that what happens is, and people are going to be hurting. I mean, inflation, everyone's going to be screaming about inflation. And what I fear is that blue team will come in with some lie about how they can fix it. And they'll
price controls. You just tell people.
Exactly. And stimmies and free bus fares and free universal health, universal child care. And we just saw in New York, right? And all of these socialist, forgiveness of student debt, et cetera. And, half the country is stupid. We're close to half, and they might, we might get outvoted, right? And so now the blue team wins. Okay, so that's pretty bad. And they do all these things. Andrew Yang is vice president, maybe Stephanie Kelton is treasury secretary, and they do UBI, right, to help all the people who are losing their jobs from AI. And it's a orgasm of money coming out of the government. Well, all of that happens. Bitcoin's going to be at $500,000 to $1 million, and gold's going to be at 10,000 and 15,000. Okay, fine, because again, we're sound money, but it's going to get really bad, and the currency is going to fail. We're going to have that. I believe in the power law until it breaks to the upside, and the reason it breaks to the upside is what I call critical state events. Critical state events are things that can go on and go on and go on. It's Stein's law. If something can't go on forever, it'll end. Think of an avalanche. You got snow on a crescent. Snow keeps falling. Eventually, boom, avalanche. Titanic, hole, sink, boom, bottom of the ocean. Okay, fire in a theater, same story. A little bit of smoke, pretty soon, get me the hell out of here. It's Gresham's law at scale, and my sense is that will happen in that 28 to 32 time frame. The currency will literally fail. Then here's the good news. Here's the really bright part, and I haven't even spoken to him about this. And he probably is angry at me for doing this. Maybe not. I don't know. Michael Saylor runs for president in 2032. And he comes in and he says, look, I'm giving all my Bitcoin away. I'm already the richest man in the world because Bitcoin's at $5 million a coin, right? I'm an MIT educated engineer. I'm a loyal American. I'm a veteran. I have the receipts. I know where we went wrong. I know what the fundamental problem is. And here's my, I'm a Thomas Jefferson for our age. Here's my comprehensive plan. We're going to have a constitutional convention. We're going to do term limits. We're going to take the money out of politics. We're going to publicly fund elections. We're going to, there's going to be a laundry list of things we're going to do. We're going to build nuclear power like there's no tomorrow. I'm going to go to China, Russia, and every other nuclear power, and I'm going to suggest we all unilaterally disarm. Just take these things apart. Mankind does not need to have weapons that can or eliminate the race. And by the way, everything's now priced in Satoshis. And we're back on a sound money standard. And at that point in time, fourth turning's over. It's totally over.
Putting all of this into context, Lepard places it within the context of the larger fourth turning paradigm, which is a time of societal and economic reorganization. When seen in this light, he is of the opinion that Bitcoin's long-term potential is still extraordinary, with the possibility of reaching $5 million per coin by the year 2032. This is particularly true in the event that future governmental leadership becomes openly pro-Bitcoin. As he anticipates in his hypothetical President Saylor scenario, there are broader forces such as liquidity, rotation, institutional reentry, and business adoption models like strategy that suggests the present slump may be establishing the framework for Bitcoin's next significant shift. This is despite the fact that the charts of late 2025 were quite painful. This challenging year is not the conclusion of the story. Rather, it is the tranquil phase that comes before the next strong expansion, if the rhythm of history continues to hold true.